Welcome in. You are listening to a daily editorial here on the KE Report. Happy to report that I am chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. Jordan, I think what's important to cover in this segment is something that you messaged to me earlier this morning when we were arranging our call time, and that was that you think it's important to comment on the precious metals and the move that we're seeing simply because they had gotten so sold off that you think, as let's say GDX, which was coming very close to your 21 target, that it's ready for a bounce for the next maybe 1 to 2 months. Now, this is all coming on the back of, again, a Fed meeting and Fed announcement today that all of a sudden the markets, especially the precious metals, really did start to tick up with GDX and GDXJ both up over 3%. But please take us through, why is now the time that you think finally this move down is over?
Well, Corey, I think there's several reasons. The first thing you mentioned, technical support. You had very obvious strong support levels, 21.00 for GDX and then about 29.50 for GDXJ. GDXJ came close to that last week, whereas GDX yesterday or Tuesday made a little bit of a bullish hammer, and I think it got down to about 21 or so within 1%. And also GDXJ, which has really been leading the way down, in the last several days or so, it started to show more relative strength than GDX. So GDXJ was leading on the downside. It started showing more relative strength. So, that's a signal that the selling has really dried up. And of course, you get down close to strong support, especially after, a strong sell-off for 2.5, maybe even close to 3 months since we had that peak in September. And in addition to that, that I'm not a big Fed watcher or worrier, but you just go back over the last couple of years, and typically we've had at least a small rebound after a rate hike. And I think there's only one time that didn't happen. And it's even more likely that you're going to get a rebound after a rate hike when you consider just the selling of the last 2.5 months or so, where GDX has come down from, its peak of about 25.5 down to almost 21, and GDXJ had an even larger decline than that. So the miners in the sector at large, silver was also really oversold. You just had a strong oversold condition going into this hike. The miners were nearing strong support levels, and sentiment indicators were not, while they're not at the levels that I think would put us at a major low, they're certainly at the levels that would tell us that, a rally is more likely than not at this point. As you noted, strong move today in both GDX and GDXJ, up over 3%. I think this rebound is probably going to continue for a month or two.
So, Jordan, in terms of the higher volume that we're seeing today, and again, just that general sell-off that you noted that started pretty much at the beginning of September, do you consider this a short covering rally?
At least for today, it looks like a short covering rally. And the reason for that is it happened on the Fed day. And over the last couple of years, a lot of these big moves that you've had on Fed day, they really haven't been that significant, in my opinion, as far as the larger trend. If you actually go back to the last two Decembers, let's go to December 2015, the market didn't bottom until past the midway point of January. And then, of course, we had a major move higher for 6 months. And then you go back to 2016. And after that rate hike, the market actually sold off pretty aggressively for the next 3 or 4 trading days. And then it was after that we had a significant bottom, because I'm looking at GDXJ right now, and that bottom below 28 and then ran up to 44. That was over a 50% move in less than 2 months. So the fact that, we're seeing such a big move on the day of the Fed, I classify that as short covering. And then when you look at just individual juniors and kind of smaller juniors, not juniors in the GDXJ, but smaller than that, they don't have that strong of moves compared to the market itself. And that tells me that the move is, at least today, was primarily short covering, and we'll probably see a little bit more of that in the days ahead.
Yeah, I share your outlook on a number of the stocks that I'm watching. Some of them, usually the bigger ones, actually seem to be putting in a better day, and some of the small ones still not seeing really any sort of share movement. There's a little uptick in volume, but again, not people racing to get in. As we're talking targets here, Jordan, GDX did come very close to that 21 level. The low that I'm seeing was about 21.27. Now that we're moving up and you have an outlook for the next at least month or two to be pretty good, what are some upward targets that we need to watch for?
Well, looking at GDX, the 200-day moving average is at 2283. I see pretty strong support there in around 23, which is not that much higher than where we closed today, 2216. So, I mean, it will be interesting to see if GDX can blow through that resistance and do so on big volume. That would really force me to kind of reassess my outlook for the beginning of the year and until the middle of the year. Now, as far as a target for GDXJ, that's been more oversold. That the 200-day moving average there is 33.52. GDXJ closed at 31.58. So not a whole lot of upside there. We'll have to see. I mean, it's possible that the miners could blow through those targets and have a bigger rally than I think, especially considering how oversold they are. I think they're at least going to rally for a month. But we'll see. You know, hopefully there's some more gains left in the tank after today. I mean, I hope that the move today was not a large fraction or a large percentage of the overall gains that we'll see in the next month. So not a whole lot of room to rally if you're looking at the 200-day moving averages, but maybe we'll go a little bit above those. We'll just have to wait and see. But I definitely think the sharp decline that we've had the last couple months, that's over, and it's at least going to take a break for the next month.
I find that interesting, Jordan, for as optimistic as you are in terms of how oversold everything was and how much we are due for a bit of a bounce back. Sounds like you're very much taking it step by step by having these targets, or at least these resistance zones that really are not a whole lot higher than where we currently are after the bounce back today. So it's might be a grinding move up then, hey?
Yeah, that's possible. I mean, I'm looking at GDXJ right now on the 200-day moving average. I did notice that in February and then the early September peak. I mean, we did go above the 200-day moving average. So, you know, perhaps we can go a little bit above that. And I think the same for GDX. So, I mean, that's just a new insight that came to mind when you mentioned it to me. But yeah, it is kind of curious that we should rally for at least a month, given how oversold we are. But that looking at the 200-day moving average, I also look at the 400-day moving average as well. The 400-day moving averages for the miners are somewhat above where the 200-day moving averages are. So that would be, you know, perhaps a best case scenario for the rally. You know, if they're able to go through the 200-day moving averages. But like I said, we'll have to see. I mean, it could. I mean, this has been 2017, as you know, Corey, has really been a grind. It's been difficult. And unfortunately, I see that continuing at the very least, at least into the second quarter of next year. I know we'll talk more about next year as we get closer, but I don't think the grind that we had all of this year, I should say, I don't think that's over. I think it's going to continue at least for the first quarter, maybe a little bit into the second quarter for 2018. But here and now, the short-term trend, I think, is flipped to now bullish.
Okay, and well, barring any maybe crazy news events to come out in the first half of next year, I think you, Doc, and I all share pretty much the same assessment that it might be, again, just kind of a grinding first half of the year. Let's also shift focus a little bit and talk about some of the more broader markets, U.S. equity markets and emerging markets. You mentioned to me that you had a couple comments on those. Please share.
Well, the U.S. market has been on fire and is really overdue for more than a 5% correction. I think at some point, maybe in the first quarter, we could see a 7 or 8% correction. And we're starting to see emerging markets. They actually, if you go back to early 2016, They've led this move higher in global equity markets. They bottomed slightly before the S&P did, and now emerging markets are starting to have, perhaps their first real correction in the last 18 months or so. I think they're down already 5%. I know some parts of the tech sector have started to get hit. So that could be a sign that the U.S. equity market, it could be ripe for a correction in the first quarter. Now, one thing I want to note is the S&P 500 to gold ratio, which yesterday it closed around 2.15, so 215. It recently had a bullish breakout. That has a confluence of really strong targets around 2.50. So, I mean, what I'd really like to see is that ratio get up to 250 before the stock market corrects, but it's only at 213, so it looks to me like that's not going to happen. So, I mean, not to get too far into the future, but I mean, that would tell me that the stock market relative to gold, you might see a little correction here, but after we get this rally, then the stock market can have another leg higher into the middle of the year, perhaps summer. We get up to that 250 target, and then that would be the time when we could see things really flip in favor of precious metals. So not to get too far ahead of where we are here and now, but that's also something I'm watching. But back to the here and now, Corey, if the S&P 500 does have a 7-8% correction in the first quarter, I think more likely than not that's going to support precious metals. And who knows, maybe that will push up precious metals a little bit higher than you and I are expecting.
Well, and that's the thing, right? If we do start to see some weakness enter the U.S. equity markets, which it seems like we haven't seen in forever, then you would think that money would rotate into the metals. Right now, though, that's just not happening. So something to watch out for. And hey, there's nothing wrong with looking well into next year, Jordan, because sometimes I know a lot of our listeners, they don't want to deal too much with the day-to-day movements. It can be almost more valuable to take a longer-term outlook and hopefully be comfortable with where they're positioned. But hey, Jordan, interesting to chat with you as always, and thanks for your technical updates for the markets.